Good morning. You're watching The Market right here on 80 Now, and we're coming out of a truncated week or a long weekend just to look at things positively. And quite a bit actually happened last week, as is slated for this week as well. The fact that Nifty declined for a second consecutive week, it was autos, FMCG, bank, they all fell. PSUs, they continue to maintain their gaining streak, and they maintain their stance for a fifth consecutive week. And broader markets, they continue their outperformance after that bit of a aberration and fall that they had start of this month when the Nifty did begin its decline from those 20k plus peaks. The broader markets are clearly back, led by PSUs, of course. They are the ones which are holding out. But Nikunj, just looking at the seasonality that the month of October, which we're traditionally or rather formally kick-starting this week, it's been a month of quite a few gyrated moves this way and that.
Yeah, if data is anything to go by, the data seems to be indicating that in the month of October, markets have fallen less and they've gained more. And will this trade setup get challenged? So the first impression of the month of October is that it's a more positive month rather than a negative month. But will it get challenged, considering that we've just seen what could be called as a wave of profit booking? Now, I'm not using the word reversal on purpose because I don't think markets have reversed yet. And I don't think they will reverse in a meaningful manner. I'm ready to stick my neck out here, even though what is happening in the global market. So the tricky part now is that in the month of May, traditionally you've seen profit booking, but in 2023 that has not worked out. October historically has been a good month for the health of the market. Will that get challenged, considering that there's a wave of profit booking in the global market and there is a little bit of excess in the mid and the small cap space, which will get challenged. So in my book, the month of October arguably will be one of the most important months, considering that there is earnings season. We will hear a lot from companies in terms of the festival season positioning, and also it is crucial considering where the global setup is.
Oh yeah, absolutely. And along with that, this week alone, you've got the monetary policy outcome as well. And like you said, the festival season officially kickstarts with Navratri, mid of the month. So a lot of data points that the markets will have to digest, and earnings season also.
Yeah, so the three things in October, Ayesha. Number one is earnings season, number two is festival, and third is the global setup. And they both are crucial to decide the health of the market. You pretty much know that globally things are getting jammed. This time around, given the run-up what we've seen, expectations from the earnings season are reasonably high. And then you've got festival season. Given that this time Diwali is in the month of November, you actually will hear a lot in terms of the pre-built up demand. You'll actually hear a lot in terms of, for example, auto dispatch numbers, what we've heard. So there will be a lot in terms of the market news flow. So if September was a month which was dominated by momentum flows and liquidity, guess what? October will be dominated only by news flow, earnings, projections, upgrades and downgrades.
You were talking about the global setup, so just let's throw a little bit more light on that, because it's been disappointing to say the least, at least for the month of September. We've seen Wall Street decline quite significantly. All three major indices have closed the month as well as the third quarter lower. And you've also seen the S&P 500, which has lost out nearly 5% in the month of September alone. So Wall Street clearly contending with rising bond yields. The fact that we have the 10-year Treasury yield stopping about 4.7%, that's the highest level since October 2007 as well. You've got crude oil prices as well that we're mapping out below $91 a barrel. The dollar has been gaining traction, and you've got concerns as well over the bond yields, as we said, and the lawmakers averting a shutdown of the federal government. So taking a look, Nikunj, at the overall global landscape, it's looking a bit shaky, at least wrapping up September with cuts.
Globally, there's a wave of profit booking which I think is there, whether it is centered around what is happening to the dollar index or the way how the Fed commentary is moving.
And the kind of movement we've seen in the bond yields as well.
Yeah, so macros are not exactly favorable. So there is a wave of profit booking, and this I think is the much overdue correction. So frankly, if you check in on the data, what you've got, let's say, in how Dow has moved, how S&P has moved, there is definitely an air of profit booking. And typically we've seen that when there is strength in the dollar index, when there is strength in the market in terms of the linearity of the 10-year paper, it tends to take emerging markets down. Thankfully for us, crude has reversed. We're not talking about it. So I don't think the macro reversal is going to be very sharp, that it's going to cause a snowball effect or a downward spiral. But markets, they go through their seasonality. We've had a good patch, we've had a good run up, but I think it's decisive to say that for the near term, global cues are not on your side. 20,000 will act as a stiff resistance for the Nifty, and you perhaps are left of triggers right now. You may get triggers from banks, and that's where I expect. If you're asking me where the surprise would come from, I think banks will surprise you. Positioning is low, run up has been not that great. So I think you are in for a surprise for banks. If you're in for a surprise from banks, then be rest assured Nifty will do very well. So those are factors which definitely will aid the market in the month of October.
Okay, let's just take stock of the micro data points as well, and it's the auto sales that we're going to be reacting to. Remember, through the long weekend, you had the monthly auto sales numbers trickle in, and the scorecard looks pretty okay, barring, of course, Tata Motors passenger vehicles and Ayesha RE, which did see a bit of a dent. It was an inline picture from Maruti and Nikunj. It was a solid performance from M&M, both on the auto as well as the tractor division. As for Ayesha, Volvo as well.
See, Mahindra was supposed to do well. Maruti was supposed to come up with a strong number. So optically you can talk about the dispatch number, but dispatch number is also base effect which has kicked in. What we need to understand is that where the surprise has come in from. And if you frankly ask me, I was looking at the surprise factor, and the surprise factor in my book actually has only come from TVS. Let's look at that number. I was just looking at numbers in the morning. So the surprise factor for a sector which is the two-wheeler sector, which is going through slowdown, TVS Motor has reported a 6% month-on-month uptick and a 16% year-on-year uptick. So for me, that is a bit of a surprise. For me, Maruti numbers on a base effect, yes, they look great, but it's only 3% uptick month-on-month and it's a 4% downtick month-on-month. Mahindra and Mahindra, I would argue back and say that markets knew that numbers would be strong. So let's see how much of the result reaction or the number reaction would be there. So surprise is TVS. The disappointment, frankly, is Maruti in terms of looking at the realistic number. Now, the challenge is that the numbers what we have right now, these are the dispatch numbers from the company, which is that the management of auto companies is confident that the festival demand would be strong. So they are really looking at building up inventory levels. Now, the question is that inventory levels does not necessarily translate into real demand. So the risk with this kind of a dispatch number is that this is pre-festival. This is the company level, like we say, the wholesale data. What if the demand is not strong? Could we be in for a discount, let's say, post the festival season? Because markets are already pricing this in, which is that the companies are dispatching, dispatching vehicles and they are looking at inventory built up. The red line here could be that if the festival demand is not at par with what the expectations are, I'm hoping that this concern what markets have, that gets diluted, but frankly that becomes a risk. And if the numbers are not, if the festival season demand is not strong, then in the second half or the last quarter of this year, we could be in for a high inventory built up, low demand and some discounting.
All right, that's a view coming in when it comes to the overall auto sales numbers. But time to also discuss GSW Infra listing. It's the IPO is India's second largest commercial port operator, and there has been fairly strong response as well that we have seen from investors. It's the first IPO as well from the GSW group in the last 13 years as well, so pretty critical to monitor. And in terms of the issue size, about 2,800 crores, an entirely fresh issue is what we've seen. So very closely, Nikunj, this one is going to be eyed.
It'll be a sparkling listing. But this is one of the stocks where you say that you do not want to, even if you're getting an IPO pop, you do not want to sell on the IPO pop. The reason why you do not want to sell on the IPO pop, because, companies, groups like JSW, they hardly list. And the history has always taught us that when you are with a good, good group where they have a deep understanding, they have a deep understanding of their businesses, they are great capital allocators, they've historically created a lot of wealth, they're in a tough business, it's a business which is a difficult business, and it's a business where you know that, if manufacturing is increasing, if GDP is increasing, if power production is increasing, and if the JSW group is expanding, the medium to long-term visibility, I think, is very clear. It was not very expensive, but given that it was from the JSW group, it obviously had a great response. So I would say that this is a stock where even if you're getting a temptation to, let's say, use the IPO listing to your advantage, because these days, before you realize the issue has gone public, you get another email saying that it's also the listing ceremony, get ready for it, because the gap is now 3 days. So I would say that with this kind of a business, which is coming from a JSW group at this kind of an valuation, you really want to hold it. You say that, okay, I'm going to take a leap of faith and I would say I will ignore the near-term volatility, but 2-3 years out, I think this is a business which has potential to create significant amount of wealth and has a serious highway in terms of growth now.
Well, the grey market premium is already indicating about a 20 to 26 odd % premium to the issue price. About 150 rupees per share is what the GMP is indicating so far. So yes, all eyes on JSW Infra. But let's join the dots and connect with our chartists as well and figure out what the trade setup for this Tuesday morning is looking like. Kunal, Naresh, hi, morning. Kunal, where's the Nifty headed this week?
Well, good morning, Ayesha. So the last 3 days have been quite interesting for the indices. We managed to see a positive session previous, Wednesday. Thursday was a sharp downtick for the index where we managed to make a fresh low, managed to break past below the 50-day moving average. And Friday was a bit of an aberration again, where the index managed to bounce. But in that bounce on Friday specifically, the index did not cross over the highs which was created on that Thursday's trading session. Now, this indicates that even though the recovery on the intraday basis was quite strong for the indices, but it was not strong enough for the index to try and surpass the previous swing highs of 19,700, 750 odd mark on the spot level. So I think that would now act as a resistance for the index. In case if we break below the Thursday's low, which is I think around 19,500 mark on the spot, 490 to be precise, then I think we could be looking at a series of a downward trend on the indices going forward and possibly a retest of that 90,000, 90,200 mark.
All right, let's get in a take from you, Naresh, and going by where we left off then on Friday's trading day, what is it that you're working with given the global setup?
So overall, we are still stuck in a band, but if we look at the global indices, they've drifted lower quite a bit over the last couple of weeks. So the last bottom for the Nifty was around 19,200 to 250 band, which I would expect to hold. And as of now, 19,500 to 450 is what I would expect to hold for the day. So overall, it's been a slow drift, and the drift has been more so with the heavyweights in the Nifty. We've not seen a similar correction or a break of the recent lows on the mid cap and the small cap indices. So we are still stuck in a range of one day up, one day down. So the bias still remains to be stock specific and be very selective. And the bank Nifty has corrected a lot more, and it's closer to the major supports of 43,500 to 44,000. So overall, looking out for reversal signals here. And once we cross above 19,700, 19,750 on the Nifty, that would be an indication of a reversal of trend. So waiting for reversal signals and then a follow-up.
Okay, let's talk stocks as well. Kunal, what's on your list?
So I'll go with a buy and a sell. The first one is a buy on Coal India. The stock looking quite strong. In fact, it's now heading towards a possible breakout of that 300 mark. So it's very close to those levels. So it's a buy with 310 as a target. Stop loss could be kept at 285. And second would be a sell on Titan. I think 3 days of consecutive mild selling for the stock price, but the indicators have started to get into a negative territory for Titan. So expecting a follow through downside for the stock. Targets of 3,070. Stop loss at 3,190.
Is your stock list as well tilted towards PSUs, considering they were the ones which held out all through last week?
Absolutely. So that's been the space. So first is a buy on GAIL India. The stock has been consolidating around the 120 mark, retesting the recent breakout, made a small move on Friday, structurally setting up for a multi-year breakout as well, expecting a move towards new 52-week highs. Stop loss at 118, target price of 135. Second is a buy on State Bank of India. The stock has underperformed the whole PSU banking space. And for the last few weeks, it's getting into a range of 580 to 600, 605 levels. The previous all-time high band at 620, 630. Eventually, once that breaks, that would be an indication of a momentum shift. So for now, expecting that test to happen over the next few weeks. A buy at current levels, stop loss at 580, target price of 640.
All right, there you have it. Those are our chartists picking out their top recommendations this morning. Time to move on then. Stocks to keep on your radar. Let's bring on board Anisha Jain, who joins us right here in our studios. And Anisha, let's begin by discussing the Q2 updates from Federal Bank.
Well, yes, a lot of Q2 updates actually came over the weekend, but it was very strong for Federal Bank because if you look at the total gross advances, credit growth, that was up 19.5%. In fact, on a quarter-on-quarter basis, we saw a jump up of almost 5%. not just the loan growth, even if you look at the deposit growth, that was rather stellar for the company. That managed to jump up 23% on a year-on-year basis. The CASA is still very strong. It's actually up almost 5.4% year-on-year. Quarter-on-quarter as well, we have seen an improvement. So overall, a good number coming in. And even if you look at the breakup of the kind of growth that we have seen, it's the retail loans that have actually gained pace versus the wholesale loans, because the retail loans have improved with a growth rate of 6.9% quarter-on-quarter. Last quarter, this growth rate was close to 5.9%. Even if you look at the wholesale loan growth, as I said, that has moderated to 3% this quarter on a sequential basis versus the growth rate of 4.6% that we had seen earlier. So the retail to wholesale mix has actually now improved to 55:45 versus 54:46 last time. So overall, a good update coming in both in terms of the loan growth as well as the deposit growth that we have seen, Nikunj.
Sinisha, they've raised capital, which is what we don't realize. And when you've raised capital, you easily are looking at growing your book at a much faster rate. With a bank like Federal Bank, growth was never a problem. It was only about their ability to command industry-beating NIMs and spreads. So has Federal Bank got their mojo back? Well, things are really falling in place for Federal Bank, and after the growth capital, what they've got, it clearly means that they're not writing off. So if you're raising capital and if you're not doing any write-offs, it means that there is no pressure of NPA. And I don't think there's a pressure for NPA for any of the banks right now. So if growth capital is there, and if you've raised growth capital, and if your CASA is looking strong, then some would argue and say that after reasonable amount of, I would say mediocre stock performance, can Federal Bank really be the outlier in the second half or in the last quarter of this year? I think the setting on the table is such that growth is back, capital is there, return ratios are there, and the stock has reasonably consolidated. And looking at the technicals also, I think there is a clear indication of momentum coming back.
Okay, let's talk Vedanta as well. What's the demerger math and street verdict, Anisha?
The street is actually quite positive because they are seeing this as a value unlocking. But of course, there's a bigger question at play as to why the consistent restructuring, whether in terms of demergers or mergers, etc. So that's of course the big question. But nonetheless, in terms of the news flow, they have divided the company into 6 parts now. Steel, aluminium, oil and gas will all be housed in separate entities, and that will allow the promoter to actually house the debt in individual companies, and secondly unlock value as well, because they can now go ahead and sell stake in individual companies as and when the investor appetite is there. Now in terms of the deal contours, the shareholders of Vedanta will get 1:1 ratio share in all of the companies, and this entire proceeding of demerger is likely to be finished by Q1 of FY25, so it's still some time away, but nonetheless it's in the works. Of course, we've seen upgrades come by from the likes of CLSA, Investec, many other brokerages as well, but they're all raising the question as to why this consistent restructuring which is happening, and they're now hopeful at least that the focus will be back on normal operations, because that is what is needed. But Nikunj, curious case, the entire restructuring that keeps on happening to manage the debt.
See, I've always said that this is one company where I personally don't understand the capital allocation. I've been very open and vocal about it. What I don't understand. First, you've merged everything because that was synergistic. Now you're demerging all the businesses because you want to use that as value unlocking. The attempt is very simple, guys. I mean, they have a debt, and that debt has become like an Humpty Dumpty debt for Vedanta. Now, by demerging it into separate entities, will the creditors agree? First thing you have to ask yourself is that creditors have given loan to Vedanta. How will the loan be shifted? How will the loan be, parked in different entities? Let's see. Second, what happens to Vedanta? I mean, ultimately, what happens to Vedanta? Will it be just an holding company? If it ends up becoming a holding company, then it will be at a holding company discount, because there's a huge amount of premium Vedanta was enjoying because it had a very strong dividend yield. The cash is out now. So what happens to that holding company discount? So if you own Vedanta, what happens there? And then, each company has a separate business. While commodities, they follow a linear cycle. There is oil, there is non-ferrous, there is ferrous, there is a global business. All those businesses have to be valued separately. All these businesses may create value, may not create value. All I'm saying is it's just too complicated. Just too complicated for anyone to understand. And it is not that, okay, there is some khajana in the company. that the stock's going to run up. Yes, long term we've seen that value gets created when you are restructuring the company, creating separate businesses. But
it has to have some rationale.
Rational is that they have to serve the debt. But will the merger go through as far as the debtors are concerned? See, the debtors have given cash to Vedanta Limited. That cash now will be divided into 6 entities. What proportion will it be parked? How will it be parked? B. Second, what happens to Vedanta Limited? It becomes a discount, it becomes a holding company, so it will get a discount. The cash is out, so the dividend premium which they were enjoying, that needs to be changed. So while markets may have their own view looking at the history, how demerger has created value, let's see what happens today.
Yeah. In fact, let's discuss that forward. We have Rakesh Arora as well from Go India Stocks joining in, the founder. Rakesh, hi, morning. Just a little puzzled. What's going on with Vedanta? I mean, what are they intending to do, and will it really work now, the demerger this time?
So it's everybody knows that Vedanta promoters are going through a little bit of rough patch in terms of debt repayment, and there's a bunching up of debt repayment this year and next year. So this year they have around $2.5 billion, next year around $3.8 billion. This year they have taken care of because they sold 6% of equity. So they got around $700 million plus, normally they get around $1.2 billion in terms of royalty and dividends, etc. So this year they are kind of sorted. For next year, there's a gap of around $3 billion. Now to fund that, they might need to sell something. Clearly, as we saw this year, when they tried to sell 6% in Vedanta, the stock has crashed by 25%. So selling stock in the market is not the right strategy. They need to do some strategic sale, and that's why, demerger of all the entities so they can pick and choose what they want to sell. And secondly, it becomes very tax efficient for them because then they pay only long-term capital gain. Otherwise, if it was in a conglomerate structure currently, it will come into the company, then dividend distribution tax also comes into play. So overall, I think promoters are doing, whatever they can to remain liquid in a case they are not able to roll over their debt next year.
But Rakesh, ultimately this is a combined debt what Vedanta has. It has to be split in 6 companies. Now if you are a lender, you would have given money to Vedanta. Now the debt would be split into power, steel, non-ferrous. Do you think it will be difficult to have this kind of an allocation and creditors may just not be very happy?
So there's 2 debt. One is the debt which is sitting on Vedanta Resources Limited, parent company, the holding company of Vedanta Limited. Then there's debt in Vedanta Limited itself. So as per the demerger, guidelines, debt has to be distributed into various operating companies. So there could be some issues with domestic lenders, but I don't think it will be that great a challenge. I think the overseas debt is more important, and that is held in the parent company, which is where the stress is right now.
My next question is that if you own the share of Vedanta Limited, you will get one holding company disadvantage as well. And now that the cash is out, then dividend yield cushion is not there. So what happens to the holding company Vedanta in this case?
So Vedanta Limited becomes a pure holding company for Hindustan Zinc shares, plus for the new businesses which they might enter. So the holding company discount can actually increase. So currently the street is ascribing around 20% holding company discount to the value of Hindustan Zinc shares held. That can go up. We have seen in cases like Grasim, Bajaj Holdings, JSW Holding, this discount can be anywhere between 40 to 80%. So yeah, that is a big risk, for the shareholders. Once the demerger happens, that Vedanta Limited might get, derated. But to your point that, dividend will go down, they have around $400 million of, royalty payment coming in every year. And on a sustainable basis, they can take out around $800 million. So $1.2 billion is a cash flow which Vedanta promoters can really take out from Vedanta Limited even after the demerger. That should be okay for, debt servicing from FY26 onwards. The only problem is FY25, and they need to sell assets there.
Is there value in buying the stock right now, given that it's already at a 52-week low?
So I won't really recommend from a long-term investment perspective. There could be a short-term bounce because stock has corrected, and even in worst case, we're expecting around 6% dividend yield. So maybe there's a little downside, but long-term investors should stay away.
All right. Rakesh, thank you for taking time out and joining in, giving us a little more clarity, given the various business developments that we see taking place with Vedanta, the latest one being their plans to create 6 separate listed companies. All right, tell you what then, we'll take a very quick break then, right here on the show. Be right back as we continue our market chatter.
Back with the market right here on ET now. IndusInd Bank, that's the one which is going to be in focus. It's going to unveil its digital bank called Indi. Let's take it across to Ankur and figure out what he's figuring out from his sources, that apart from banking, the new platform, it seems, will also provide equity trading and has partnered with Paytm exactly for this. Ankur?
Yes, sources say that IndusInd Bank is planning a digital launch this week, and this launch may happen on Wednesday itself. There is a digital bank which the lender is calling, and it is named Indi. Now, this Indi will provide all kind of banking services, including opening of account as well as FD services and credit facilities. But this is not limited to just banking services. The lender is also providing equity stock broking services in partnership with Paytm Money. Now this will be available on its new digital bank, which is named as per the work which the lender plans to ascertain from this new launch. Now, as far as the plan is concerned, it is part of a Digital 2.0 strategy of the lender and PC6, as the lender had informed earlier. In fact, ET Now had earlier reported that the lender wants to enter into mutual fund as well as insurance business as well. Now the lender aims to increase its presence in the individual segment, and hence this new digital launch is planned. Remember, the lender had posted a net profit of over rupees 2,100 crore in the June quarter, and with this digital initiative, the bank wants to expand its business in the individual segment.
All right, thanks very much for giving us those latest details. Let's move right on then. And multiple stocks, including the likes of Dabur, Tata Consumer, Pidilite, they're all going to be in focus after there were management meets. And JP Morgan has actually shared some of the key takeaways. What exactly is the overall sentiment looking like? We've got Vinny here to break it down for us. Vinny?
So absolutely, JP Morgan has met with all these managements, and let's start with Dabur first. And Dabur has, in terms of the management meet highlight that has come in with JP Morgan, they're highlighting that domestic volume growth is expected to gradually start recovering. Margins are expected to be at around 19.5% in FY24 and gradually start moving up to 20% as well. Q2, yes, witnessed some bit of a volatility due to uneven monsoon rains. Premiumization is what the company will be focusing on, and that is going to be rising across most of their product segment as well. Healthcare division too is to witness new forays into baby care, therapeutics, as well as branded ethical leveraging on doctor advocacy channel will be something that will be scaled up further by the company as well. An inorganic route to be explored for selective forays in white spaces where they see which is available in preferably that's mostly going to be in the domestic market. That's a key highlight that has come in from Dabur. Tata Consumers, what is the key highlight? That one, domestic tea and salt, both these portfolios are witnessing a gradual improvement in volumes, with price now being largely stable. Sampan's portfolio also is quite healthy in terms of the revenue growth momentum. 30% is expected to something that they're expecting to sustain going forward as well. Nourishco is scaling up well, and that is going to be aiding the mainly aided by the distribution expansion as well as innovation of the companies. International business volumes are going to remain weak, mainly because of the operational rationalization, and that is expected to drive the margin recovery. That's the word coming in on Tata Consumers. Tata Coffee, the integration could be expected in the next few months, while the opportunity to improve profitability and cash flow will also be there. And Starbucks also has a high growth ambition of 70 to 100 stores additions per annum, so keeping an eye out on Tata Consumers as well. Let's move on to Pidilite. Positive demand trends is what Pidilite is highlighting in terms of a narrative that has added mainly an improvement coming in from small town consumption, real estate cycle, upcycle that we're seeing, and government's focus on infrastructure spends. That would be something that will be aiding Pidilite as well, and they're seeing a recovery in terms of demand. Demand for export and B2B players is depending on export remains quite weak in terms of that, slightly weak over there. International business is largely going to be focusing on emerging markets. Gross margins have recovered in Q1. EBITDA margins are maintained at 20 to 24% is what they're expecting. And paint play will be focused on smaller towns. That's the word coming in from Pidilite as well.
Okay, Vinny, we'll leave it at that. That's quite a few management commentaries there. But the key listing today, and that's what the street has been waiting for, right? JSW Infra, the first IPO from the JSW Group in the last 13 years. In fact, let me take it across to Sharad, my colleague, and get in more details.
Well, yes, in focus, we are having JSW Infra, and this is the first IPO coming from the JSW Group. And the thing is, the IPO price is at roughly 119 rupees per share. Now, if you look at the subscription numbers, that is coming at almost 37 times, and the total IPO raised money was almost 2,800 crore rupees. Now, of course, what we have seen from the grey market is expected that the premium listing is expected to happen by more than 20% odd. Also, importantly, the company would be focusing ahead in their expansion and getting more orders coming in from public ports as well, and currently their revenue breakup between anchor as well as third-party customers include between 65 to 35 odd%. And if you look at the valuations also, EV EBITDA front, especially on the FY24 basis, it's coming at roughly 13 to 14 times as compared to Adani Ports 20 times. So you're expecting a strong listing on the bourses today.
Thanks very much. We certainly are expecting it to be nothing short of a sparkling listing later today. Meantime, let's discuss charts then. And Naresh, wanted to get in your thoughts, given that we've discussed Vedanta in extensive detail on the fundamentals. What are the charts looking like?
So technically, the stock has been weak for quite some time now. So if you were to look at it, it went back all the way to the May lows of around closer to 200 odd levels. So some bit of a bounce coming out from the 200, 210 band, which was the low mid in last year of May. But overall, the trend remains weak unless and until we cross about 245. That's the max we can expect in this bounce, 240, 45, which would be a tough one. We've seen some bit of a recovery on Friday, but overall, the trend remains weak. And the whole metal sector also has not been a very strong trend, so would be an avoid at current levels.
Kunal, what's the chart of Reliance from Friday telling you? Because it was a little volatile, picked up, and then again you had a cool off in the dying minutes.
Yeah, I think the last hour selling has been a bit of a question because the near-term trends for Reliance actually was showing signs of stability at the 2300, 2350 mark. So over the last 4 or 5 days, the stock had seen, prior to that, the stock had seen a very sharp selling. There was a huge volume candle for Reliance Industries on the daily charts, on the spot levels a couple of days back, and then the stock stabilized at the 2350 mark, which generally is an indication that maybe the selling pressure is finally behind the stock price. It's already trading significantly below its key moving averages. So that was also one of the key points, that maybe the stock could probably have gone to a sharper absorption of the sharper selling for itself. But then after Friday's selling, it generally indicates that maybe the entire selling is not over for the stock price. So now what we have to look out for stock like Reliance is, let the stock confirm a breakout above its previous first major resistance. I think that comes closer to 2400, 2420 mark for Reliance Industries. That could be the first confirmation that maybe the near-term trend or the weakness for the stock is behind us, and we could now expect the stock to be a lot more stable. So as of now, would wait out for a breakout above the 2400, 2420 mark.
2400, 2420 is critical for a breakout on RIL. All right, let's move on to autos then and discuss the September auto sales numbers for Maruti, what the festive season holds in store, with Shashank Srivastav, who now joins in on the show. Thanks so much for taking time out, Mr. Srivastav. Given that this month the PV industry has seen record sales, festive sales just starting, what is it that you're expecting for the months of October and November?
Yes, looks like. Actually, as you know, we have the festive season in India spread over different states at different points of time. It normally begins with the Onam festival in Kerala. That's starting from 17th August. So always the start of festive season in India is 17th August. And in automobile industry, we take the end of that season as the Bhai Dooj, which is 2 days after the Diwali. That's on 14th November. So if you take this period, and this period is about 87 days in this year, keeps varying, of course. Last year it was 71 days. Roughly 23 to 26% of the annual sale happens in this period. And in which case, since the industry is looking at a 40 lakh sale this year, 41 lakh sale, it's expected that in this festive season this year, 1 million plus vehicles will be sold. And of course, in the Onam, which was specific to Kerala, where about 13-14% of the Kerala sales happen in the Onam period, that has happened very well, and we saw an uptick of almost 24% there.
Sure. But Shashank, if we see the inventory, which is now at a 3 to 5 year high as well, how do you see this? Because post festive season, maybe going into 2024, do you think we could be in for a little sober sale year as compared to what 2023 was?
Inventory level at the moment for the industry around 331,000, which is around 30 days of stock. Not very high. That seems to be the normal inventory pre-COVID. But of course, in the last 3 years, we haven't seen this type of inventory build up. In fact, 331,000 was touched 5 years back in September of 2018. So it is obviously the inventory level at somewhat at a high level. But remember, this is the Shraddh period now, 29th September till 13th of October. Normally in this period, retails come down and stocks build up. And inventory is added by the dealers because they expect sales to happen post the Shraddh period, which will start from 14th of October. So it really depends on how the retails shape up after 14th October, because expectedly then the inventory will come down. And going forward for 2024, if the economy continues to grow the way it's been growing, then we can see the positive momentum continuing. However, there are some red flags like inflation and higher interest rates, which could be a dampener going forward.
All right, let's move right on then. And Mr. Srivastav, what is the outlook in terms of your discounts? Because this is the time that the most attractive discounts are being offered in the small car segment in particular. So where exactly is the company planning discounts this festive season?
So as far as discounts is concerned, the smaller cars that you're referring to, yes, there have been some discounts, not only in the festive season, before that as well, because the production, the supply was much more than the demand for the vehicle. And the reason why the production was not modulated as per the inventory and the demand was because the semiconductor crisis prevented OEMs from making those other larger vehicles for which we had a long waiting period. Now that the semiconductor crisis is somewhat in the background now, since July of this year, we have modulated the production of the small cars, and as such, I do not see the discount levels going up for those models also from the levels that we see now.
Okay, Shashank, great to have you on the show. Of course, we're going to be waiting out for how the street reacts to the Motown sales for the month gone by. But as promised, we've got a very, very special guest lined up for today. And from today onwards, you can catch him exclusively on ET Now and ET Now Swadesh. Let's welcome him in. Well, there it is. Sanjeev Bhasin and Nikunj Dalmia dancing all the way into the studios. That was the first.
First one, yeah, on TV. Having lived in Delhi.
On TV, of course, yes. First one.
Bhangra.
Grand welcome for Mr. Bhasin. Hello, hello. And he will be taking a seat just shortly. And of course, we'll be quizzing him. Do remember that he is one of the top stock pickers. And we'll be getting his insights. Which stocks is it that he's bullish on? What does he think is a good buy at the current levels? ET Now and ET Now Swadesh will be picking his brains on these very questions from now onwards. Of course, on our digital platforms as well, we'll be sharing all of these insights. So please feel free to connect, comment and share. Nikunj, I'm sure you have lots of questions. What is it you want to ask him about first? His dance?
I first want to ask Sanjeev Bhasin, firstly, welcome to the ET Now family. Are we going to be dancing this way for the markets as well this week or not?
Well, good morning, and it's overwhelming, you know, the type of way you... But I must say, Nikunj is a better dancer than all of us. and you know, Ayesha and Avanne, I did the same thing on Friday in Ludhiana and Saturday in Amritsar. So, I mean, you are doing it now in Mumbai. So, I think Punjabis are here to rule the roost and chak de phate. We are going to dance all the year and the next many, many years. The stock market is just an indicator of the atmosphere, the happiness, the positivity. And I think Nikunj has just brought that all to the fore. So thumbs up. We are hitting 20,000 this week.
Absolutely. So, what's going to lead us to 20,000? Is it going to be banks? PSUs are the ones which are actually dancing for the last 5 weeks now.
Yeah, but you need a heavyweight. You need Reliance to start to get into action. You need HDFC's underperformance to come to a head. And I agree that bond yields and the other uncertainty, but take it with a pinch of salt that you cannot have GST numbers the way they are. You cannot have the talk of a bond inclusion, and you cannot have the re-rating of India, which is imminent. Now, obviously, there will be volatility, but I think we've come to a very, very sweet level where the index may start to outperform. You cannot have Maruti and PNB and Bank of Baroda hit new highs and L&T and still the market underperform. But like I said, it's an opportunity. Now, what you have to do, Ayesha, is broaden your horizon. India is there for the asking, but your time horizon has to get little extended.
Yeah.
For markets to go higher, you need a heavyweight. But what could take the heavyweight higher? For Reliance, the geo listing has happened, so there is no trigger, and GRMs have come down. For HDFC Bank, they've come and done a self-goal by saying the next 3-4 quarters, our numbers would be depressed. This is a comment from HDFC Bank. Markets were not expecting it. It's HDFC Bank which has come out and admitted, I think 2 weeks ago. Yeah. Third ITC, well, the hotel demerger is also out. So for any heavyweight to go higher, which has a reasonable representation on the Nifty, 7-8%, whether it's HDFC Bank, ITC or Reliance, what could be the individual triggers?
So clearly, Reliance, look at the three things. You've said Jio Finance is listed, but look at the numbers from Jio and Jio Fiber. Now, Fiber is a new entrant and it's raring to go all across. You're going to get 5G across the board. Even, you know, Ayesha, the real beauty of India is in the smaller cities. You go there and you see what Ludhiana or Jalandhar or Amritsar, because there the momentum, the tempo is so high and that retail flows are giving me enough confidence today. Secondly, Jio Fiber. Thirdly, you know, Nikunj, Russia has stopped exports of distillates. Now that gives a huge opportunities for OTC, which has, you know, not done much to come back. And fourthly, retail. We are at the cusp of the festive season. You know, these 14 days are the Shraddhs, which in the Hindu calendar. 15th comes the first Navratra. The World Cup, we are not even talking about that. And our medal tally at the Olympics, so at the Asian Games. I mean, take it, you know, where are the positives hiding? So in all this gloom and doom, that means A. B. HDFC Bank has been a bank which always underperforms and over-delivers, just like an Infosys used to. They've tried to plateau the returns over a period of time, but look at the branch expansion. You will not, Nikunj, get an opportunity to own the 7th largest bank in the world unless there is some uncertainty. Bad news is always a good time to accumulate very good stocks. And thirdly, you mentioned now Lever and ITC have been more or less range bound, but I think maybe a Lever or a ITC, maybe a Lever definitely can look to, you know, humming the strike. We have TCS, which is coming out with a dividend on the 12th. Results should be in line to better than expected. TCS, by the way, hit a 52-week high in all this humdrum of negative news. So enough triggers to take us higher.
Yeah, and just taking a look at the scorecard when it comes to the auto sales numbers, what have been some of your key takeaways?
So, Avanne, we are just at the cusp where auto sales are now streamlining their, logistics, the supply chain, the semiconductor, and the demand. You know, someone told me that he had booked the Mahindra's V10 or whichever. He said, I was offered delivery after 6 weeks. If I could pay accessories, I would get it within 1 week. The accessories are worth 60,000. So Mahindra is making money hands over fist, whether we like it or not. They are not going to come on TV and say that, by the way. Maruti's come out with numbers of 1,83,000 dispatch. Believe me, Ayesha, this will go up to 2.5 lakh in the next 6 months. They have an order book of 35 lakh vehicles. Now, in this humdrum, we will keep talking of oil. By the way, oil has corrected almost 5%. And according to me, oil is going to further slip on. You cannot have it both ways. You cannot have the US Senate pass the shutdown, not get shut down, and yet yields go higher. So I think this is the last of the pessimism maybe in the US. And in India, it's giving you an opportunity.
You know, in every edit meeting, I have been told that Nikunj, you are always bullish. I mean, I have this whole view of looking at glass half full. But sir, I concede to you. Even a bull like me, even a bull
Please
like
have
me.
your water.
Sir, as you see Bhangra paya in Punjabi, next time the girls also have to do that.
Yes.
And when we go to 21,000, the whole group has to do it, including Kunal.
Of course, Kunal will.
And that's coming sooner
Kunal
than
is
you
already
thought.
gearing up for Garba. Navratris are coming.
Naresh, you want to come in? Garba, Bhangra.
At 21,000, I'll come to the studio and do that.
Okay, so let's archive the statement. Ayesha, please tell digital team to save it.
I'm done already.
All right, 19,638. For this year, you may talk about the market, but frankly, in terms of an index representation this year, minus ITC to some degree, one or two IT names here and there, the market has done precious little. 8% is nothing, given that we've already done with 3 quarters now. With 1 quarter left, if you close in and around 8%, that's hardly any gain. Bond markets, they give you 7%. So in relative terms, you may talk about gains and absolute gains, but I think that's not true. But now let's look at the railway space, the defense space, some of the shipbuilders. Where have they moved? From the recent 52-week high, have they started reversing? Now, one is absolute change and second is move from the recent high. 190 plus for RVNL has become 170. In 1 month, they're still in the green. For Kochi shipyard, even for smaller PSU banks, the skim from the top, I think, is evident. The skim from the top has started, and markets never go in a linear line, and some of these stocks have gone in a linear line. Can one say that the best of the gains in these stocks is over? If you own them, don't sell them, but don't buy them now.
Well, yes, take it with a little bit of caution and try and do a sip rather than go wholehearted, because they've run up far in excess of what actually should be the key. We agree the order book but the execution will always remain a little bit of a challenge, and I think the RVNLs of the world, the IRFCs, they may have already hit a near-term top. So like I said, Nikunj, the real for me the comfort lies in Reliance and HDFC Bank, purely on the basis of the underperformance and the price. In the end, I have to make money on what I can buy. Plus the uncertainty means if I'm in a bigger heavyweight, my delta becomes much less. Yeah. But like I said, the opportunity lies in identifying the stocks. At 40, PNB was a hated stock. At 82, nobody wants to let go. So the feeling of missed out in some of the PSU is humongous. And I would still suggest the CPSE ETF as being a good conduit where you have 12 businesses, 12 good stocks, and they give you an opportunity. So basket of stocks would be better.
Right. So aside of these, what's on your buy list right now? If you could give us 3 stock ideas.
So firstly would be obviously Reliance. Then Ayesha, I've been talking of Devyani International from 190 levels. Now I'll give you the simple process. Whenever I travel, and I travel almost I think Starbucks dominance is now going to Costa Coffee. And their range, particularly my wife likes the carrot cake and so on. So that preference for change is coming. You have Pizza Hut, you have Kentucky Fried, which is not only a chicken, it also is catering to the veggie. Okay. And I think their outperformance will now come vis-a-vis Zomato, the Jubilant and the others. Plus with the added advantage of the festive season, the World Cup, Devyani could be my dark horse. Then look at a share like SRF. SRF is the largest player in fluorochemicals and the largest single supplier to Bayer and one of the largest crop. We think the agrochemical underperformance may be coming to an end, but you're getting SRF at a very, very sweet multiple. China sooner rather than later will get over Evergrande and other things and come back, and I think SRF can be a dark horse. Fifthly, I've talked of SBI cards, which I think will be one of the best players on the festive season, the spending, and their liability franchise being fixed, the margins will be very sweet. And lastly would be IEX. I agree that there is going to be a little bit of competition, but you can't ignore a company which has 93% market share, 85% EBITDA, and where volumes will be actually 10, 15, 20 times in the next 3-5 years. So I think IEX are closer to this 130 is a must have in a portfolio.
Okay. I just want to bring this point out for our viewers for SRF, and there are very rare you see great compounders. Now SRF between 2000 and 2010 did nothing. Between 2010 and 2020, SRF just sit out of the park. It really became one of the biggest multi-baggers of the century. Let's look at SRF. This is this year, doesn't matter. Stretch it up slightly. Just stretch it up, 5-year, 10-year, and you will actually say, oh my God, what is this? SRF in this decade, and when I say this decade, let's look at last 8 years. Yeah, 8 years SRF has given you a 10x return. Now that's a phenomenal return for a stock which has a very strong history. The second one here I think is Tube Investments. By the way, in a blog deal, I just read that SBI Mutual Fund has now bought into Tube Investments. This is one of my favorite examples. I look at Tube Investments, 8 years, 6%, 6 times, more than 6 times. 2000 to 2010 it did nothing. 2010 to 2020 it became one of the biggest multi-baggers of the century. Is SRF headed there?
Well, as a disclosure, we are invested, so we have a positive interest. It's a Delhi-based company. I know the Bharatram, the group, and I know the youth is raring to go. They are in all businesses which are, originally when we graduated, I'm talking of many years back, the SRF was the favorite ground for MBAs to do your, analysis. It was such a pedigree company. But from where to where it has transitioned itself. I definitely think it's a beauty of a stock to own. The business is superb. Maybe the upcoming, quarterly season will give you an indication of how they are. The softness in prices may be done with. Another point which I'd like to point out is, Nikunj, market had a premonition of India getting included in the bond index. When you get included, the sovereign bonds will do the best. So REC, PFC, NTPC, that's why those stocks have got re-rated. And I can tell you they can even be re-rated from here on the upside because the yields will mean additional profitability. They are like sovereign, bonds which we have. And the market may have sensed that 3 months back. That's why this huge outperformance. So like Nikunj said, they were the 10-year baggers. We have these 2-year baggers who are already up 3-4 times. And there is a bonus in PFC.
Kunal, let's get in your take on the charts of SRF actually. Where do you see it headed?
So I'll probably believe that the stock has come back towards the 2021 low for itself. So I think at 2,200 levels for SRF, in terms of price support, it looks very interesting. Now, I'll also throw in a time cycle over here. So over the last 15 years, I think from 2007-8, the stock has this odd tendency of going into a huge rally, 3 years of correction. So I think we saw this in even in the year 1999 to 2002, the stock went to a 3-year correction, 2005, 2008, 2010, 2013. And the recent top which was actually made for SRF was actually in 2021. So if we go by that, then possibly by 2023 end, we could be looking at the stock forming a major bottom for itself. So risk reward wise, even in the recent charts, as I said, that the stock has come back towards the 2021 odd levels for itself. So the risk reward and the supports for SRF are quite strong enough.
Okay. Let's switch gears and 5 minutes to go, then we'll get the pre-open rates. Vedanta. I had to take my glasses out. I said, क्या हो रहा है? पहले तो 6 कंपनियों को merge करा, फिर de-merge करा.
Correct. Now, there is uncertainty on the debt levels, how you handle it, but there will be enough private equity players to buy some of the individual companies, which could see the near-term pressure. The rest will depend on how you outperform. We know that it has been a highest dividend-paying company, but there has always been, initially also, Nikunj, when the stock went to 85, there was problem because you merged the unlisted Vedanta with some of parts. And that was not taken well by a lot of the foreign. But now again, when you have private equity searching for ideas, The individual businesses are, some of them may be very, very big, creators of wealth, and you are getting it at market at already discounted at 215, 210. It may have been, everything is in the price. However, like I said, we still think Hindalco is a better bet over there because there is more certainty. And if the dollar seems to be topping out, then there could be other ferrous and non-ferrous plays which are better. But I am very sure they'll get over this because there will be enough private equity players to buy individually the demerged companies.
See, Ayesha, to put it very simply, the objective is that they have a debt which they have to manage. Now, there are only two ways you can do it. You can repay the debt with your cash flows or with your cash reserves, which they don't have, or you, in a sense, split the companies, reduce the debt so that you can, increase in those baby Vedanta companies. You can get more participation. That's what some groups have attempted in the past. But my point is that while Mr. Agrawal will be able to come over this entire credit crunch or the debt crunch they're currently facing, for an individual investor, there are a lot of other options which are available, which are far cleaner companies where the visibility is going to be there. I think markets may be discounted what Bhasin Saab is saying, a lot of bad news already. But at a time when you're really not bereft of ideas, one is better off just academically analyzing the news rather than buying the stock.
Why would you buy? Yeah. And that's the other thing, right, Sanjeev, because the stock is already at a 52-week low. Do you buy it? Do you buy as a trader just for a little bit of a pop, as we saw on Friday when I think the stock was up over 6% and decent volumes as well? What's in it for a long-term investor?
So, like I said, the things will unfold. How he splits, what are the suitors who can buy shares of that, what would want to buy an interest. See, we know that the commodity cycle is looking like it's going to go. China will get over a lot of its problems sooner than later. But like I said, I would rather go with the Hindalco where I know more certainty and however, if you are an uncanny investor who can look at value, then you are getting enough on their plate because he has delivered over a period of time and the dividend payouts have been fairly substantial. But like I said, it's a glass half full, half empty. Most people will be wary. The real fear may be out of it, but the opportunity is there. Just like I made as a disclosure, the last 3 days I have, for clients, bought a lot of Delta Corp. Now a lot of the bad news is in there. I'm not buying it at 280, but I cannot believe a better business than gaming and casinos. There will be litigation over that, but we know Zia Modi is one of the best lawyers in the country. So at 138, I had the opportunity. Maybe I have to sit through, but I will, like I said, the price is the opportunity.
Where else is this price is looking so attractive that you want to be a buyer?
So I'll give you two dark horses. One is ABSL AMC. I am very convinced ABSL AMC will be a doubler by the next year.
Bala's coming at 9.20. He'll be very happy.
Well, tell him, please, for God's sake, start the rent. It's like 100 rupees was AB Capital. I was stuck my neck out. As soon as you had the ICICI lady come, she's turned it into a Lakshmi. Yeah. So I am very sure ABSL AMC is headed higher. You cannot ignore. See, Ayesha, Nikunj,
so you're saying please hire a lady to run it. Was that the please for?
or get another one on your board so that there is more transparency and people get more visibility and please start to deliver because it's very, very undervalued.
They just need to get they need to regain some market share losses. I think that is where I think the tricky part is. And frankly, for some of the top AMCs, till the time that SEBI TR clarity does not come in, these stocks will just hang in there.
Yeah, but now you have someone bidding for UTI AMC, yeah. I just read. Yeah. So, Nikunj, intermediaries are in the best business ever. I mean, I travel every weekend. It's not because brokerage, AMC, insurance, these are going to ride their way over a period of time. And if you want to own a chunk of India based on the retail participation, then you have to be in one of these businesses. Like you said, they can be a quarterly up and down and so on. But I am looking at the underlying business. Where I think multiples will only get higher.
Yeah, there's a great tweet from Mr. Harsh Goenka, and I'll just love that tweet and we'll try and make it up. That value of trust. Look at Reliance Jio, current market cap north of 1,50,000 crore, current operating profits nothing. Yes, a big balance sheet, but it is a Reliance company, backed by it is a Reliance Group company. And that is the value of trust what a Jio Financial is commanding. For a company which has just taken birth, has right now no operating business, is not projected to do anything big for FY24, it is already commanding a market cap of 50,000 crore. I mean, I love that tweet. This is the value of trust, what you're getting. Market cap of 1,50,000 crore just got created out of thin air.
Correct.
I mean, nobody and 1,50,000 crore is what, about $30 billion? No, 20 billion dollars.
Correct.
$20 billion just gets created because of the legacy and because of the pedigree the Reliance Group, in a sense, has enjoyed. Where is this business headed now? Where is the stock headed?
So I don't know. I have some elite clients who are very, very long term. They have, as a disclosure, done a SIP in Jio and HDFC Bank, and they're doing it daily. They think there is enough value in Jio, and they're talking of the next 3 years. So like I said, don't compare it on a quarter to quarter. Give it 2-3 years. There is a pedigree change of Blackstone and others, and the mutual fund industry or the distribution business is humongous. So that's why I think, like you said, trust, pedigree and performance will come with time.
Okay, curious to get in your take. You spoke about, different sectors. What about when it comes to new age tech, the likes of a Zomato, etc.? How are you looking at the kind of performance that we've seen, the improvements in their overall financial? Has there been anything that's struck you?
Well, we own all three, Zomato, Paytm and PB Fintech. In fact, PB Fintech will be my stock for this Diwali to next Diwali. I think Paisa Bazaar, the Policy Bazaar is raring to go, and they've done their IT, scramble extremely well along with Paytm. We cannot look at these stocks, Avanne, from their lows. We have to look from the highs because they've stabilized their businesses, particularly Paytm. You can't do without it. And the QR business which they are talking of, we are doing 5 times more digital transactions than China. Secondly, the lending arm is also going to be on vendors for 5,000 rupees on the Kirana store. So they have the IT network. It is just a matter of how fast the earnings will catch up over a period of time. So I would suggest all three stocks to be done a SIP. Don't look at the top, don't look at the lows because they are not going to come. Zomato will not come back to 50, but any decline would be a buying opportunity in all three.
Okay, Sanjeev Bhasin, always great to have you in the studios, and we will be seeing more of you.
Yes, it's been a pleasure, and thank you all very much, and look forward to a very, very prosperous relationship for us, for ET Now, and for the viewers.
Yes, can you bring some nice chicken makhani or something from
next time you're getting the best butter chicken in Gurgaon, along with the best naans which you want. Naans will be cold, but maybe something else to add to that.
Done deal. We will look forward to that.
हम वेजिटेरियन है भाई.
आपके लिए दही कबाब लाऊंगा. दही कबाब बहुत बढ़िया.
चलो सेल्फी ले लेते हैं.
Okay, on that note, we're taking a selfie, yes. But let me also take it across to Sharad. He's currently at the bosses, waiting for JSW Infra listing. Remember, it's the first from the JSW group in the last 13 years. So let me take it across to him, find out what's the buzz all around at the Bombay Stock Exchange. And Sharad, the grey market premium is already showing an uptick of 26%. Okay, his line is disconnected. Let me quickly take it across to Kunal in the meantime and get in some mid-cap ideas going as well. Kunal.
So I'll go with NMDC as a strong bet. I sense that the stock has come back towards a strong breakout point. So there was a correction of 10% for NMDC over the last 2 weeks. The stock has come back towards that 145, 149 mark. So the risk reward is also attractive at current levels. Would suggest a buy with a target of 170 for NMDC and stop us at 140.
Okay, Naresh, what about your mid-cap strategies?
So that would be a buy on Oil India. The stock has made a huge cup and handle formation, came back to the same highs made in June 2022 when crude was at $130. Good volume seen over the last 2-3 sessions, trying to make that breakout about 300, 305. Eventually that breakout should happen, take it towards 350, a buy at current levels with a stop loss at 285.
Right, let's get a move on then and track some of the other top headlines. An electric car maker, Tesla, has reported Q3 numbers up 27% on year, down sequentially on the back of factory downtime. The company sold 435,000 vehicles, and remember, during the second quarter earnings call, the executives had already warned of their production declining. Meantime, the former US President Donald Trump has appeared in person in New York's court for civil fraud trial. This has been focused on the mammoth business empire practices. Trump has labeled the case a witch hunt against him, terming it illegal, saying it's an attempt to derail his poll campaign. And in a major advancement against the fight against malaria, the WHO has authorized the second vaccine that could be produced on a massive scale at a cheaper cost. 3-dose vaccine has been developed by the University of Oxford with help from the Serum Institute of India.
And back home, the BJP has expedited election campaigning as Prime Minister Narendra Modi will be visiting poll-bound Chhattisgarh and Telangana today. The Prime Minister will launch a slew of development projects worth 34,000 crore rupees in the two states. And shocking incident coming in light from Maharashtra's Nanded, where at least 24 patients have died in the last 24 hours, 12 of whom were infants. While politics over deaths heats up, the Civic Hospital Administration has claimed the incident happened due to funds crunch.